Hello from Reinvest24. Welcome to our live webinar. My name is Tanel, and today we're going to look deeper into the details to give you a better understanding how the platform works, how we minimize the risks, and secure your investments. So let's get started. We're going to start explain the company structure. So how does everything actually works? It starts with finding the right property. We'll make an agreement with the seller and list it on the platform. The property is now open for investment. That's where all the platform users come into play. At the moment, we have almost 1,700 verified users from around 50 countries. And all of them can now collectively invest into the listed property, starting with just 100 euros. Once the property gets fully funded, Reinvest Holding, our holding company, will register a private limited company with a single purpose to purchase and stay operating the property. These private limited companies are known as SPVs, single purpose vehicle. For each property, there will be a separate company that will be financially independent from the platform and all the other projects. That means that even if one property will have some financial difficulties, it will not track down the other projects. And let's say even in the unlikely event that the platform goes bankrupt, it will actually not have any effects on the properties, and your investments are still safe. So that's the reason why we use the SPVs, this single separate companies for each properties, to minimize this risk. So the property is funded, and we will transfer the funds from Reinvest24 to the SPV to purchase the property. The SPV will be the legal owner of the property and will stay operating it. The goal here is to give the investment the equity investment characteristics through our legal structures. So the SPVs are obligated to pay out all the profits that it makes back to the platform. With the rental properties, it's monthly payouts, from where we will distribute the rental yield between all the property shareholders. I will come back to the property shares in a bit. So this is how we minimize the risks between different properties and even the platform risk that one day, in unlikely event, it will be bankrupt. This will actually not harm any of the properties, and all the properties are totally independent. But how do we secure the investment? So right after purchasing the property, the collateral agent will put first range mortgage on the property with plus 20% valuation from the funding target. And it will hold it in favor of all the investors. So this collateral agent is an independent law firm. This is the service that they provide. So this is how we secure the investments. The collateral agents will not allow any transactions with the property, as well as making sure that the profits are distributed to the investors. If, for example, if the SPV misses 3 consecutive payouts from the rental yield, then the collateral agent will have the right to take over the property with a single purpose, to sell it with the best possible price and distribute the funds back to the investors. So this is the worst case scenario, that the property doesn't produce anything, but that doesn't mean that the capital is lost. So this is the worst case scenario, right? So this is the company structure. This is how it works. And this is how we eliminate the risks and secure the investments. Now, let's talk about the property shares. We have hundreds of investors in each property from many countries. It will be almost impossible to register them all as the SPV shareholders or property owners. So we use property shares, and the main goal here is to provide you, through a legal structure, with the same benefits and security as owning the real estate. This means three things. We're going to talk about the rental property shares first. So the three things. First of all, the profits that the property generates. The SPV incomes after the operating cost will be paid out monthly. The next thing is the property value. The appraisal report will determine the shares book value. So all platform properties will be revalued once a year. For example, if the property total funding was 100,000 and one property share was valued at 10 cents, let's say we finish some construction or legal works that increase the value to 120,000. So there is 20% gains. Then one property share will automatically be valued at 12 cents. So there is also a 20% growth. Now, what will back up that value? The collateral, right? Held by the independent law firm in favor of all investors. So let's say if you own 1% of total property shares, then you're entitled to 1% of the first rank mortgage that the collateral agent holds. So that will secure the investment the same way as owning it, and also the investors will benefit from the property the same way as they would while owning it. The profits that it generates, the value, and the collateral. The idea here is to keep the investment and equity investment characteristics, right? So what about the development projects? With the development projects, the property shares stand for the same things, same three things, but the only difference is how the SPV makes the profits. So with the rental properties, it was the monthly payouts from rental yields. With development projects, let's say buy to sell projects, the profits are made upon exiting from the project, from the property. Let's say we do some development works or some legal work, and we sell it with a nice profit. So that's the main difference here. The property value, same like in the rental case, and the collateral as well in the same case. That also means that the SPV cannot make monthly payouts like with the rental properties, right? Since the profits are made upon exiting the property, so the returns together with the principal amount will be paid back at the end of the period. For our 3 Majaka development projects, we have guaranteed a fixed interest rates, annual fixed interest rates, and the interest will be calculated from the day of placing the investment. So it's a little bit different than the property shares, but we just thought that it will be more understandable concept as most of the P2P investors are more familiar with the development loans. But the idea is the same. We want to provide our investors with equity investments into real estate. So let's move on. Another very important aspect in the risk section is how do we find, what properties we offer you guys. And our property selection process is very comprehensive. We want to be fully sure that there are no hidden risks or any other issues with the properties that can harm the yield or the value and cause us problems in the future. So how does this process work? We start with analyzing the market. It is important to understand the current state as well as the short and long-term potential. Where is the market heading? We just published a fresh update in our blog about Baltic real estate market. All our projects are from this area here. So make sure to give it a look to understand better. Next up is the location. When it comes to real estate investments, it's all about location. Whenever we find a property in an up and coming area with potential, we start looking into it further. Is the area favoring short-term projects, or will it have long-term rental demand and as well capital growth potential? So these are the questions we try to answer. Another very important aspect is the price. And we always try to figure out whether the price is negotiable. We're always looking for arguments and aspects to give us some edge negotiating with the price, because this will have a huge impact in our yield. Another thing, of course, is the yield, right? So it's very important to identify if the yield is more attractive for rent or sale transactions. And we are rather conservative with our yield calculations. We always leave some room for unexpected errors. So there can be a surprise that the estimated the payouts will be higher than the estimated yield, for example. Yeah. The yield stated on our new property section is the net yield. So that means that it's the profits after the operating costs that will be paid out for you. Next up is options. So we investigate to find out if the property is a pure cash flow project, or whether there are additional benefits that can be explored. If the property can be developed further, there's more money to be made, right? Options like changing the nature of the property from commercial to residential, or any other combinations, can significantly increase the investment yield. It's something that we always look for. Existing contracts. So some of the rental projects, some of the rental properties have already existing rental contracts. So the rents, in some cases, they are long-term, and they are very attractive bonus, since there is immediate cash flow on the property. But it's also essential to explore if there are any obligations that can potentially cause issues. For example, a long-term rental contract for property that we want to renovate or develop in the near future can become an issue. So we need to look at, we need to figure that out before taking any steps. Another very important aspect, if we're looking to keep the property for long term, is limitations. These are usually like hidden risks. Our team conducts a background check to make sure our properties don't come with any problematical issues, like obligations, third-party rights, or some errors with permits or anything like that. So this is something that we will look very deeply into. If you would like to know more about how we choose the right investment properties, make sure to visit our blog, blog.reinvest24.com. We have a blog post there about this section, how we choose the right investment objects. You can read more about it and understand the whole process further. So yeah, this is also something that we take very seriously, since with the rental projects we plan to stay operating them for 10, 20 years, maybe even longer, and we don't want to offer our users anything that can harm their capital. We want to be fully sure that we understand all the aspects and the consequences that can follow. So let's move on to the comparison. So today I want to compare the real estate equity investments with real estate backed loans. They're both P2P, so they're both crowdfunding. But what are the main differences for both? What are the pros? What are the cons? Right. So let's start with the real estate equity investments. The pros. The funds are used for purchasing real estate. Like I showed you in the company structure, the funds will be directly transferred to the SPV with a purpose to buy purchase the property. While with real estate backed loans, the funds will be transferred to the borrower, and you can never be fully sure what are the funds actually used for. Right? Passive monthly income, this goes for rental properties, and it's very sustainable and totally passive income. Since we do all the management work, doesn't really matter much if the market is up or down. There will always be rental demand, so there will always be cash flow that the property produces. And altogether, it is a very low risk, long-term investment. For the rental properties, I would say that the combined yield, the capital growth and the rental yield is pretty close to the level of the real estate backed loans. So the returns are pretty close to the same level. It might just be a little bit longer term investment. So let's move on to the pros, real estate backed loans. Probably the strongest argument for at least me is that there is greater selection of projects to invest in, more frequent projects. That provides opportunity to diversify our investments into smaller amounts between many projects. And I truly believe that this is a must for risk management if you're investing into P2P loans. The shorter hold period is definitely a pros as well, since it's nice to get your capital back together with the profits. But if you're looking to invest long term, then at the same time it can cause a lot of extra work for you, and it's very time consuming to find tons of new projects, analyze them. I would strongly recommend to always do your due diligence and look further into the properties before investing, or properties or projects. But altogether, real estate backed loans are offer more liquidity. So let's move on to the cons. It's difficult to find new properties. This has been the reason why we haven't been able to provide you with frequently enough new properties, but we're putting a lot of effort into this section, and our pipeline is pretty full at the moment. We're just analyzing the properties very truly and very comprehensively to make sure that that we can keep the property for long term, and your capital is safe, and altogether the investment is very profitable and successful. We basically do all the work for you guys. So, but still make sure to read all the investment cases and property overviews before you're investing. So the second thing, the capital growth is on paper until you exit. Yeah. So this is the same if you're owning a real estate. Let's say you bought an apartment in London city center in 1980. The capital growth is huge, but you don't see that money in your wallet or in your bank account until you sell the property, right? So it's the same goes with the real estate equity investments. And most profitable properties do not provide immediate cash flow. If they would, then most likely the seller is not very happy to negotiate with the price or give any discounts, because it's producing good returns for him, and everything is going great, right? But if there are any additional expenses with the property, let's say some construction work, some legal work that needs to get done before renting it out profitably, then the price is more negotiable, and altogether the investment can be a lot more profitable. But I know that the platform users, they want immediate cash flow and they want to see results straight away. But that's just the most profitable ones are usually the ones that require some development works. But since our investors also benefit from the increasing value of the property, so if we do some works and the property value grows, then actually you're already making money from day one. But it's just on the paper. Yeah. So let's move on to the real estate backed loans, the cons. Most likely borrowers depend on other projects. So let's say the developer has 5 projects and the 2 of them are having some financial difficulties. Probably the one that you invested in might also be dragged into this and might also be having some problems. Fixed investment periods. This is the one point that I explained in the pros section as well. If you want to invest long term, you need to put in a lot of work and time to always find new investment opportunities. And I always recommend to do due diligence before investing and make sure you understand the project fully. And there is no capital growth. So even if the real estate itself that backs the loan grows in value, then the investors don't get any share from that. They get the share from the fixed interest that they agree to, and the developer will make that money. Altogether, the bottom line is that the rental properties are more sustainable throughout the market cycles. So if you're looking to invest long term, it's a lot lower risk. Even in the time of housing crisis, there will be always rental demand. So that means that the investors will still receive monthly payouts, and over time the real estate market has always recovered, and we believe that it will always recover. Something need to change in this world drastically for that not to happen. And what will happen to the development loans if the market crashes? Will the developers be able to pay back their loans, pretty expensive money that they take from the crowdfunding? If not, then what will be the market value of the collateral? Let's say the unfinished property in the housing crisis situation. Yeah. So the risk difference is quite big, I would say, but the combined yield with the rental real estate is pretty much the same as real estate backed loans. So guys, thank you for staying with us, and I hope you got something out of it. I hope at least you understand better how the Reinvest 24 works, and what steps do we take to minimize the risks and secure your investments. If you have any questions, make sure to email me, tanel@reinvest24.com. If you're looking the recording from our YouTube channel, just leave a comment below, and we will get back to you. So thank you guys, and have a good evening. Bye.